Hello, ladies and gentlemen, and welcome to the chart scan trading lesson. My name is Andy Jordan, and today we have Wednesday, March 16. I have received an email last week asking me what I think about selling option premium during a report coming out or during an announcement. And the idea was, while looking at the euro FX chart last week, um, selling the premium on the day when volatility kicks in. And before we have a closer look at the Euro FX chart from last week, let's have a look at the definition of two different volatilities. We have the historical volatility, which means it's the one measuring how volatile the underlying future market is, and the implied volatility is the volatility measuring by entering the price of option premiums into an option pricing model and then solving for volatility. Though implied volatility is directly connected to the premium of the options, while the historical volatility is the volatility we can see on the price on the underlying chart. Now let's have a look at the Euro FX, and as you can see, well, we are looking here at the 60-minute chart, and that's when we had the ECB announcement last week. And as you can see, implied volatility was actually much higher when historical volatility was down. And as soon the announcement came out, the implied volatility already went down, and historical volatility went up. We can have a look at the daily chart, and you can see pretty much the same. Implied volatility was much higher before the report or the announcement came out, and then the implied volatility already went down. The reason for that is most of the time before reports, before announcement, people are or traders are buying more premium for options, just because, well, because of the fear factor. And as soon as the news are out, as soon as the report is out, then the implied volatility usually comes down. We can also go one day forward, and you can see, well, implied volatility already came down. So important for us option sellers is, well, we have to look into implied volatility. We cannot trust what we see regarding volatility of the underlying, because not always when we see historic volatility high, it's not always implying that implied volatility is also high. We always have to check both, because, well, implied volatility is actually what we want to see high when we are into option selling, and not necessarily the historical volatility. Okay, ladies and gentlemen, that's it for today. I hope you like this small trading lesson. Have all a great trading week, and looking forward for next week. So everyone, bye bye.